We can't really return to the so-called high-octane markets that we came from, where we talked about the alphabet soup of products that didn't make any sense at all. No economic rationale for these things. We certainly don't advocate that. So we're going to come back to a simpler, smaller market that's rational, basically. And we're even seeing some green shoots appearing, I think, in securitization markets, even right now, thanks to some of the initiatives that have been put in place by the U.S. and the European authorities. We have to look for ways to reduce the reliance on rating agencies, and that even starts with the authorities and regulators themselves, in that they built a lot of credit rating into their rules and regulations. And that kind of gives a stamp of approval to these things. We've got to remove that too. And also this cult of short-termism in compensation has to be lengthened. They have to be paid based on the long-term performance of these products that they sell. That we got to make sure that the originators of these products maintain some interest in managing them properly and so on. So there's been a number of different proposals put forward to put more skin in the game. The problem we may have with that is if they all come to be at the same time, they could actually crush the market and go from basically a market that can't recover it, too expensive to actually carry out the securitization because of these layers of well-intentioned ideas.
What we found was that in the early parts of the crisis, which was during a time of very high market uncertainty and counterparty risk, where the crisis was seen as being one of liquidity, it was the provision of liquidity by central banks that was seen as the most effective by the markets. While in later stages of the crisis, when the crisis evolved into one of solvency, the most effective measures were those of recapitalization of banks or asset purchases by the authorities. When considering unwinding crisis interventions, the main thing that policymakers need to have in mind is that a lasting confidence has returned in financial institutions and markets. That's the most important. Another important aspect is to communicate both the timing and the general parameters of the manner of this engagement. Even though, having said that, we should note that since every country has experienced the crisis in different ways, and its financial sector really differs, there isn't a common template for all countries.
That's right, yeah. Because if you're talking about like reviving something...
Part of the strategy of unwinding should be very clear understanding of good communication and managing market expectations. These are important points. As well, there are certain crisis interventions that may provide arbitrage opportunities if they are withdrawn or unwound in one country before another. An example of that is government guarantees of bank debt, of new bank debt issuance. And it would be good in that, at least in that case, to have countries coordinate the timing of the unwinding of that guarantee.